We're joined now on the phone by Marc Faber. He is the editor and publisher of the Gloom, Boom, and Doom Report. You can find it at his website, www.gloomboomdoom.com. Mr. Faber, thank you so much for joining us today.
It's my pleasure. Thank you.
Now, you're calling from Atlanta, but you're usually based in Hong Kong, I believe?
Yes, correct. I lived 30 years in Hong Kong, and now for the last 10 years I have a house in Thailand. So when I'm not traveling, I'm in the north of Thailand in Chiang Mai.
Well, it's certainly an honor that you were able to speak to the good folks down here in Atlanta on your trip to North America this time through.
It's my pleasure.
Well, I wanted to start by just asking you some questions in broad strokes. A lot of people now are thinking that the U.S. economy, the stock markets are now in the clear, that we might have a slow, sluggish recovery, but things are on the up and up. And on the other hand, there's still some concern that we might not be out of the worst of it. What are your thoughts in general about the economy right now?
Well, basically, post-2008, we had a huge fiscal stimulus, in other words, government spending, and we had QE1 and QE2, in other words, highly expansionary monetary policies. And if you look at the stimulation packages and the results, then obviously the results are disappointing, with the economy now slowing down again very considerably, and with housing still being essentially at lows. So there has been some improvement, but there has been some improvement globally. And in the U.S., in some sectors, there was some improvement, but in other sectors, there was hardly any improvement.
Do you think the Fed is going to continue its money printing?
Yes, I think so, but maybe they will hold for a while before they inject more liquidity into the market, because they may want to see the reaction of the market to the end of QE, and I think the reaction will not be very positive. I think that we had a huge upward move in stock prices, and I think that the market needs a correction here.
Well, your long-term outlook on U.S. government bonds and treasuries, U.S. government debt, is very negative, but what is your short-term stance?
I think what happened is over the last 2 years, we always had bouts of inflation fears and strong economic growth, and then being replaced by deflation fears and disappointing economic data. And for the last couple of weeks, the economic data that has come out has been disappointing and showing that the economy is slowing down. But this doesn't change the fact that longer term, treasuries are unattractive investments.
How do you expect this next leg down to manifest itself? What should people be looking out for to know that we're now starting to go over the precipice?
Well, I mean, it's difficult to say whether we're going over the precipice or whether we just have a slowdown that will then lead to renewed economic expansion. But my principal worry is what is happening in China. And I think that in China, the economy has slowed down already considerably, and that this will have an impact on industrial commodity prices and the currencies of suppliers to China, such as Australia, Canada, Brazil, and that this could have a negative impact on global economic growth. So I would avoid essentially very economic sensitive companies, cyclical companies, paper, steel, and industrial commodity producers. And I would focus more on consumer staples and maybe healthcare companies.
We're on the phone now with Marc Faber, editor and publisher of the Gloom, Boom, and Doom Report. You can find it at his website, gloomboomdoom.com. Marc, one of the things that I typically hear is that gold and silver, and investing in gold and silver is more speculation. But can you explain maybe the differences between gold and silver as speculation versus a means to preserve wealth?
Well, I think what we're having globally are central banks that are printing money. Printing money means basically to increase the quantity of money in the system. And when the quantity of money in the system is being increased, it usually leads to credit growth one way or the other. And it leads to some symptoms of inflation. These symptoms can manifest themselves at times in rising wages. This is now not the case in the U.S. At other times in rising consumer prices, at other times in rising commodity prices, or equity prices, or home prices, and so forth and so on. The viciousness of printing money, in other words, you inflate money, is that these price increases do not occur simultaneously and with the same intensity. In other words, the money flows can go for a while in NASDAQ until year 2000. Then they can go into housing until 2006, 2007. And then they can go into commodities and so forth and so on. And when people say that gold is in a bubble, I would say the only bubble I can really see is the printing of money in the United States and the government's fiscal deficit, which, in my opinion, will actually stay here or even go up. And so gold is like a currency whose supply cannot be increased indefinitely.
Well, Mr. Faber, for our listeners here in Atlanta who haven't had a chance to read the Boom, Gloom, and Doom report and who haven't had a chance to see your interviews, what would you say is the long-term outlook for the value of the U.S. dollar?
Well, I mean, in general, I think that most paper currencies, and I don't think that the euro is much better than the U.S. dollar, because they're also bailing out ailing countries like Greece. But my view would be that paper money will lose its purchasing power. In other words, if you compare how much you paid for a cup of coffee or a hotel 20 or 30 or 50 years ago and what you have to pay today, then obviously $100 doesn't go as far as it went, say, 20, 40 years ago. And I think this continuous erosion in the purchasing power of money has been accelerated in recent years by Federal Reserve's monetary policies that keep short-term interest rates below the rate of inflation. I'm sure most of your listeners will agree with me that their cost of living, including insurance, educational costs for their children, food, energy, and direct and indirect taxes are rising at least by 5% per annum, possibly for some households even by 10% per annum. So with short-term interest rates at essentially zero, if you have a deposit with the bank, you're being robbed by the government between 5 and 10% per annum, because that's the loss of purchasing power of the dollar. And I think the long-term value of the dollar is its intrinsic value, which is the cost of printing a dollar bill. In other words, it will be pretty much worthless.
Mark, one thing actually your range of between 5 and 10%, if we go to the Clinton era methodology for tallying inflation, we are at 6%. If we go back to the method they used during the Reagan years when they were attempting to accurately measure the cost to maintain a specific standard of living, we are at the 10% level. So that range you give is actually fairly accurate according to the different methodologies that we've used in the past.
Yeah, sure. I mean, I have a number of readers worldwide, and I ask them, if anyone has the feeling that his cost of living are increasing at less than 5% per annum, please send me an email. I didn't get a single email.
Well, I would think most of them here in the U.S. are around 10%, but the problem that we have because of the propaganda that's being put out by the government, people are blaming food companies, energy companies for these rising prices, where, you know, the real culprit is actually the federal government and the Federal Reserve.
Yeah, absolutely. You're right. And the thing is with the government is that they're basically lying. And not to own any gold would be to trust governments. I'm not saying that the gold price will go up in a straight line and maybe we'll get a correction of $100, maybe even $200. But in general, I would tell every person in America and around the world, you've got to have an insurance. The way you have a car insurance, the way you have a health insurance, the way you have a fire insurance. And gold is an insurance against the viciousness of governments and the lies of governments.
I think it's also worth pointing out to the listeners, Mr. Faber, that you warned about the coming financial crisis well before it happened. When you issue a warning, people need to pay attention.
Well, I think, the problem is that this is the past. The future is not so clear. There are people that think that we will have a deflationary bust. This is not my view. Before we have this deflationary bust, governments will print money like there is no tomorrow. There'll be QE3, QE4, and so forth and so on. But in general, I think that people or investors should diversify.
Well, Marc Faber, thank you so much for taking the time to speak with our listeners down here in Atlanta. We certainly appreciate your time.
It's my pleasure, and I've been to Atlanta. It's a wonderful city.
Well, thank you very much. We've been on the phone with Marc Faber, editor and publisher of the Gloom, Boom, and Doom Report. Again, you can find it at his website, www.gloomboomdoom.com. Thank you again, Mr. Faber, and we wish you well on your trip.
Thanks very much for having me on your program.